Joining us at Post 9 is Edward Jones, senior investment strategist, Mona Mahajan. Is it too late to get excited about this rally?
Yeah, look, I definitely think that there are opportunities that will arise this year. And look, any given year, we know that 1 to 3 corrections are the norm in the market, usually in the 5 to 10% range. Everyone has been waiting eagerly for that correction to arrive. We haven't seen it yet. In fact, the S&P 500 has been up almost 25% in a straight line without a 5% plus correction since really October 27th of 2023. Now, we thought perhaps the Fed would be a trigger. They actually proved to be a supportive part of this rally. They gave the markets what they wanted to hear. They're looking at rate cuts still. But keep in mind, fundamentally, the story remains intact. This economy is on a good track. We see Fed cuts coming at some point this year. And by the way, inflation, while it may be bumpy, looks like it's headed in the right direction.
But with valuations where they are, what does that signal about how much of that is already priced in?
Yeah, look, valuations are stretched, but stretched in certain parts of the market. So certainly if you look at the Magnificent Seven, they're trading somewhere around 27 to 30 times forward earnings. But if you look at the S&P equal weight index, that's actually closer to 15 to 16 times forward earnings. So there's an opportunity. Usually when interest rates are heading lower, valuation expansion is part of the story. And certainly parts of the market, we could see more of that.
If you go wider than that, I mean, small caps, even abroad, but particularly domestic small caps, the valuation gap's even bigger. But we don't necessarily, it's always the conversation about equal weight versus overall S&P. Do you think small caps will play catch up?
Yeah, we certainly think that small and mid cap in particular have some scope to run here. And if you keep in mind, those indexes in particular in those parts of the market were held back because they are highly leveraged. They have a lot more floating rate debt. When interest rates are moving higher, they were under pressure. Now, if we start to see that story reverse, interest rates moderating, the small cap space will benefit first. But we actually think the mid cap space is an interesting way to play that rally as well, because they are less levered and they have that scope for expansion if the economy moves higher as well.
I wonder what the next catalyst is, Mona. We get a PCE report on a day where the market's closed on Friday, but it's February data, and Powell kind of de-risked the February data, saying January, February, fine. And then I guess it heats up. Following week, we'll get jobs. Second week of April, we get CPI. What do you think matters most?
I do think that people will be watching that inflation data carefully. To your point, I don't know if Friday will be as important as it might have been had January and February not happened for CPI already. But I do think the April CPI data will be key, because the Fed has told us that it'll be a bumpy path, but they're not yet sure if January and February were just bumps or a new trend. And so April will determine that for us. I do think the jobs data will be important too. The labor market is a key part of this story. We want to see some of those wage gains cool off a bit to support lower inflation too.
Just quickly, delivering Alpha survey, nobody's expecting zero rate cuts. If there are zero rate cuts, does the market fall out of bed?
We went from 6 to 2 to 3 without much of a move in the market. So actually, I think markets are braced for rates to be higher for longer, but they see a gradual path, not only this year, 2-3 years of Fed rate cutting cycle ahead. So maybe some volatility, but an opportunity.
It feels like as long as we have the promise and the whiff of rate cuts in the air, the markets, is it just buy the rumor, sell the fact?
Yeah, and it's interesting. It's not only the Fed, it's global central banks moving all in the same direction, of course, except the Bank of Japan. But that being said, this is an opportunity not only for markets, but think about capital markets. IPO, M&A and activity has been so stagnant over the last couple of years. That could change as we get the liquidity picture changing in the next year or two as well. So there's a lot of excitement and anticipation building that this could be a good opportunity for markets and capital markets broadly.